Long gone are the days of waiting to be seen in a doctor's office only to have that awkward conversation with your healthcare provider. WISP gives you access to sexual and reproductive healthcare from the comfort of your home. Get treatment for BV, yeast infections, UTIs, and much more delivered directly to your home or ready for pickup at your local pharmacy in less than 3 hours. The best part? WISP is discreet, convenient, and you don't need medical insurance to receive care or prescription medication. Visit us today at hellowisp.com.
Mochi Health is a long-term weight loss solution personalized to fit your unique needs and goals. Meet one-on-one with board-certified obesity doctors and registered dietitians who are on a mission to listen. Eligible patients can access custom-formulated GLP-1 medications at an affordable, set price and get them delivered to their home each month. No insurance required, FSA and HSA accepted. With 24/7 customer service available, Mochi Health is here to partner with you on your journey to a healthier life. Take the free quiz at joinmochi.com and use code AUDIO40 at checkout for $40 off your first month of membership. That's joinmochi.com.
Welcome back to another episode of Investies. I'm your host, Linda Garcia. This week on the podcast, we are going to dive into the Federal Reserve's annual stress test on the banks, what it is, why it takes place every year, and what the results for that test were this year. But before we get into that, let's discuss how the market performed last week. Last week, we did experience negative growth in the market. There was also volatility in the market. The majority of this volatility was due to Trump and tariffs. What's new? He had previously promised that he was going to have all of the tariff negotiations completed by now. That didn't happen. If you listen to this podcast and you're watching tariffs, then you know that there's really no surprise there. It's very like Trump to have these sort of back and forth wishy-washy patterns that just keeps us all confused. We are now getting hit from tariffs by other countries, and he's now imposing tariffs on other countries. Honestly, I'm bored of it. I don't even feel like discussing it because anything I say that he negotiates with a country will change next week anyway. And I'm just bored of it. And honestly, the market is too, because it hardly reacted to the news when we compare last week's reaction to some of the initial conversations surrounding tariffs that we've been having in the last 6 months. So we're all bored. No surprise there. The stock market is indeed a reflection of our emotions. So if we're all feeling fatigued surrounding the topic, the stock market is certainly feeling fatigued as well. We over here on Investies are going to be more productive with our conversation on the economic news that took place. The Dow Jones did drop 1.02%. That does kind of make me raise my eyebrows a little bit because it is usually the slower moving index out of the top 3 indexes. We typically don't see it outperform the S&P or the NASDAQ. In this case, it did outperform it to the downside, of course. The S&P dropped 0.31% and the NASDAQ dropped only 0.08%. The NASDAQ has really been working hard to recover. We have, of course, all of the infamous tech stocks that have just been on a tremendous little rally here in the last several weeks. So I guess it's good to see that despite the volatility, the NASDAQ has showed us that it's really not that concerned about tariffs or any of the back and forth that's going on there. I do want to highlight that we have something out of the norm that is taking place during this earnings season. If you are an earnings call nerd, then you most likely already know this. If you're listening to this podcast, this is already taking place. We started earnings season this quarter on a Tuesday, which has never, ever happened in my 12 or 13 years of listening to earnings calls. It has never happened, with the exception of April 7th back in 2020 on a Tuesday, but that was because we were in chaos from the pandemic and we just wanted to kick off earnings season and try and process how the pandemic was impacting publicly traded companies. Although it was relatively early, we also were looking to our executives to give us forward guidance for the pandemic, which is something that all executives refuse to do, and it makes perfect sense since they had never dealt with a global pandemic. We were in a global crisis, and so it made sense to kick off earnings as soon as possible. Here we are again, kicking off earnings on Tuesday, which is really weird, by the way. Traditionally, we always kick off earnings season with the banks. That, of course, has not changed. We then typically roll into the technology sector. All of that is still the same. So yeah, I just wanted to make sure I shared that in case some of you all were confused. We are kicking off earnings season this Tuesday. And you all already know that this is my favorite time, mainly because this is when you can really expect growth or decline. And I welcome both.
What does every USAA member have in common? Family. We're one big family who supports the military community and their eligible families. And if you, your parent, or spouse served, you could join our family and save big on auto insurance. Visit USAA.com/join today to check your eligibility. Membership eligibility and product restrictions apply and are subject to change. USAA means United Services Automobile Association and its affiliates, San Antonio, Texas.
Introducing the new Volvo XC90 with 7-seat versatility, Google built-in, and advanced safety features for all your precious cargo. The new Volvo XC90, designed for life. Visit volvocars.com/US to learn more.
Since the 2008 housing crisis and economic crisis, the Federal Reserve has conducted a stress test that is a requirement for 22 major banks. Some of those banks include JP Morgan Chase, Citigroup, Bank of America, Morgan Stanley, Goldman Sachs, basically all of the ones that hold hundreds of billions of dollars in assets and have a wide-ranging businesses that touch every part of the U.S. and global economy. The purpose for this stress test is to ensure that large banks have sufficient capital to absorb potential losses during a severe recession. So they basically create these crazy scenarios that include adverse economic conditions, macroeconomic variables like unemployment, GDP, interest rates, and asset prices. And then they run the banks through this scenario and see if they can absorb losses, what their revenues and expenses would look like. It's a pretty crazy test. Here is a fun fact. In 2019, when the Federal Reserve conducted this stress test, the hypothetical scenario that the Federal Reserve created was, in fact, a global pandemic. Creepy. Very creepy. And so they were already somewhat prepared, at least with hypothetical data, on how each of the major banks would handle a global pandemic. This took place the summer before the actual pandemic, and it's giving The Simpsons. I already know what you're thinking. What is the scenario for 2025? The 2025 stress test consisted of a severe and adverse global recession with an unemployment spike. However, here's the thing. Despite this stress test being called severely adverse global recession with a high unemployment spike, it is receiving a lot of criticism because apparently it is much more lenient than all of these stress tests that have been created in the past. So basically, they went soft on the banks during this specific scenario. So it is receiving a lot of criticism for that. That's something to take into consideration. While the banks did in fact pass this stress test, it's important to note that it was not as rigorous as years past. In the hypothetical scenario that the Federal Reserve created, they had a GDP decline of 7.8%. They had an unemployment spike that went all the way up to 10%. They had inflation drop where consumer product index went all the way down to 1.3%. They also had interest rates drop all the way to 0.1%. They had asset prices drop by 50%, housing prices drop by 33%, commercial real estate drop by 30%, and of course, they put stress tests on the credit markets. They expected a surge in volatility. And of course, they also reflected international recession with Japan, Europe, all taking a massive hit. What's really interesting to me is as we look at this hypothetical scenario that's created, you can really see, especially from the perspective of where we currently are right now, why millionaires are born during a recession. Why, if we are properly prepared with liquidity, we can really take advantage of exponential growth in the future for the long term if we invest during a down market. I found myself getting excited to hear assets dropping 50%, the housing market dropping 30%, interest rates going all the way down to 0.01%. So much opportunity that is easy to identify, not only from this perspective where we currently are, but more importantly as investors, because we really start to understand how money works and how to set a plan to create exponential growth. Put your money to work. It is truly about patience and then waiting for these types of opportunities. I think what I really struggle with is getting excited about opportunities like this, but then also understanding the reality of these types of opportunities and, of course, the hurt that is taking place during these times. But this is why it is so important for us to really take financial literacy serious and also to really work on our relationship with money. Here at Investies, our entire team is dedicated to contributing to the financial literacy of everyone that needs it and that can benefit from this podcast. So we are almost approaching our 2-year mark. And as we approach our 2-year mark, we, of course, are evaluating how Investies is showing up and in what way, and also working to be accommodating to my new and ever-evolving schedule. And I just want to say thank you so much for joining us. If you have anyone in your life that you feel can benefit from financial literacy or can benefit from Investies podcast, we'd like to ask you to share the podcast. And also, if you can rate and review our podcast on Apple Podcasts, that, of course, always helps amplify the podcast and spread awareness. Thank you so much for listening to this week's episode of Investies. We'll catch you on the next one. Investies is an In Luz We Trust and a Cosmic Standard production. I'm your host, Linda Garcia. A special thank you to the team, Eliza Smith, Asia Simpson, and Jacob Winnick.
Paradise Paradise is back.
It's finally here.
In a new location, Costa Rica. There will be adventure, drama, and romance.
All gas, no brakes. That's my vibe.
Ready to find some love.
But it wouldn't be paradise without surprises along the way.
These kids need to learn.
That's right. Your favorite Golden alums are crashing the beach.
We bring in a party, baby.
Bachelor in Paradise. New Mondays at 8/7 Central on ABC and stream on Hulu.